Welcome to TheoTrade. This is Don Kaufman. June 1st, 2020. Just a few minutes left inside of today's trading session with the S&P futures up some 12 handles, but all eyes are on volatility right now. I'm also going to take you into a couple of sector rotations I think you're going to find quite entertaining. Let's get to work here. So to begin with, the S&Ps have just kind of been grinding a little bit higher inside of trade today. And I'll come back around to volatility in a moment, but I want you to take again a very intricate look at the S&Ps. As I said just a moment ago, all right, so they're grinding a little higher throughout the course of today's trading session, maybe backing off here a little bit into the cash close. But the point that I want to make on this particular front, if you look at the two sectors that have really driven a lot of trade lately, what have they been? Okay, it's been the financials, and the financials right there are up, okay, about 1.25%. Then you also take a look at the monsters of tech. The monsters of tech, what is it? That's your conglomerate symbol of Microsoft and Apple, okay, Facebook and Amazon and Google, and it's up 1%. So what gives? What do I mean, what gives? With the two largest sectors basically up by the tune of over 1%, the S&Ps are seriously lagging behind. Okay, we're seeing a very, very strange sector rotation. The market sees it. The market definitely feels it. I'll come back to that in just a minute. Before I go any further, now I actually want to take a look at volatility because, listen, again, all eyes are on the volatility. What gives? What do you mean what gives? What stands out to you in terms of volatility? I'm literally going to freeze the screen with only 3 minutes left to go in the trading session because, well, it's that unusual. If you take a look at some of the volatility products, they're up. And they've been up throughout the course of this trading session. In fact, when we start to bring up the volatility futures have dropped a little bit, but they're up. And they're up by the tune of almost 2%. The VIX is actually up almost 2.5%. When I scroll down, though, to the bottom of the screen, now what you're actually looking at is a 9-day VIX. The 9-day VIX is up some 10%. All right, the 3-month VIX is up 2%. The VVIX, massively unchanged in the day. But what gives? Okay, the marketplace clearly sees risk approaching right now, and I'll further that by looking at the SPX, the mother of all products. Again, it's kind of a day where, all right, we're just kind of grinding. It's nothing really to be concerned about. But the fact that we're grinding higher, okay, with financials considerably higher, with the monsters of tech considerably higher, why would volatility be up? And this is the kind of thing where a lot of traders are like, well, there's this going on, and everybody tries to bring, reasoning to the table. Maybe it's China, maybe it's some riots, maybe it's, we can go on for a half an hour over here. The bottom line, none of that matters. What matters is the marketplace is anticipating more risk, okay? And yet the risk is not rearing its ugly head inside of the S&Ps yet. It's a very ominous tone for marketplace that you typically don't see. The other point that I wanted to make with this is if you take a look at the SPX, the expected move, okay, over the weekend, and this is based on Friday's close, was supposed to be, it was about $78, plus or minus $78. So we just passed through, obviously, Saturday and Sunday, and those count. Oh, those don't count. Yeah, they do. They count because there's weekend risk. So we were at a $78 expected move on the entire week. And here we've passed through an entire trading session, and we still have about a $67.50 expected move. And again, very, very curious. Volatility is kind of just bumping a little higher, amping up a little bit prior to what? That's a good question. Evidently, the marketplace sees risk. I would say that is the single largest takeaway, okay, from today's trading session. To kind of further that for just a moment, what else are we seeing inside of the marketplace? Well, as I was saying a moment ago, I want to go over to the financials. So the financials, let's look at them on an intraday basis. They took off to the upside right before the cash opened. They started bidding up and sold off a little bit, took off to the upside, and have been up throughout the course of the day. And again, they're up over 1%. Monsters of tech, same deal. In fact, big tech is actually racing into the close, but it's not helping the S&Ps. This is the exact point that I'm trying to make. First of all, if you look at the advanced decline line, with big tech up, right? With what? With the financials up, you would expect the advanced decline line to be absolutely stellar. It's anything but. This is an absolute slop fest in here. You have stocks, okay, within the technology sector that are defecting, and they're defecting in quite a large way. All right. And, of course, they're going to be like, well, okay, I get it, Microsoft. And I'm actually not talking about Microsoft necessarily. I think you'd have to bring into scope Intel, which is also a considerable market cap. It's no Microsoft, obviously, but Intel is actually down by the tune of almost 2%. Okay. To bring into scope, you have what I call old tech. Intel down fairly large. Okay, Cisco down over 3%. It's actually dragging on the NASDAQ, and there's actually a bunch of stocks in the NASDAQ that are not performing well. There's the closing bell. That are not performing well today. Again, it is a highly convoluted tape. You can see even the S&P is backing off here right into the close. Highly convoluted tape. You realize you have the emerging markets. It's flying. That's 2.3%. Okay, what gives? You have the energy sector up by almost 2%. What gives? The S&Ps are not flying over here. Exactly. And the market, it can smell it. And that's exactly why I think that the volatility happens to be up. These are all aspects you want to focus on. Again, what the biggest takeaway is here, okay? Risk prevails. That's what you need to understand, that the risk is growing in the marketplace, okay? You need to be on your game the remainder of this week. Quite frankly, I expected today for the marketplace to be a rockin'. By that I mean I thought the S&Ps were going to be up or down at least 30 handles today, because that's kind of what expected move was anticipating. We get anything but. We have an advanced decline line, convoluted to say the least. 50-50, almost a total slop fest. We have sector rotations going on. I mean, come on. When was the last time that you saw Amazon up 1%, Facebook up by the tune of 3%, Apple up 1%, and it wasn't enough to sustain gains inside of the marketplace? Okay, we're slipping. This is not, the big bearish connotation. We're slipping. Again, the volatility kind of feels it. You get close eyes on this marketplace throughout the remainder of the week. We are outside the volatility box, okay, to the upside. But danger absolutely lurks. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.